The more I started to learn about Beyond Meat, the more bullish I become. I believe that this is a high potential stock. And in this deep dive stock analysis video, I will show you why I decided to buy more. I will also talk about the potential second wave short squeeze and how we can profit from that. So without further ado, let's get started. Many years ago, Beyond Meat used to trade at around $150, but now it's only $2. How is that possible? Well, the biggest reason for that is because they have a lot of financial trouble. They have a lot of debt issues and they're not profitable. So the second reason why Beyond Meat is only trading at $2 and why this company has collapsed so much is because of its economic moat. An economic moat determines whether a company has a competitive advantage, and this is based on Warren Buffett's framework. And so let's find out about Beyond Meat, right? So we're going to analyze it, and we can see that it doesn't have a moat. So Beyond Meat has brand recognition in the plant-based meat market, but lacks meaningful cost or distribution advantages. Competition, low switching cost, and weak profitability limits its moat strength. And here we can see the strength, and here we can see the risks of this company. Previously, we used this formula to find out how many months they had left before they run out of cash. We filled in all these numbers. So we used the total cash and short-term investments and the negative cash flow from operations, the amount of, and we divided by the period length. And then we find out that we had around 11.5, roughly a year time before they run out. So this is great because that means that they have a buffer. It's similar to if you get fired from your job, but you still have cash in the bank for the next year. You have 1 year time to find a new job. That's plenty of time. And that's basically the same situation as this company is in right now. It's now October 28th, and we can see that Beyond Meat is now trading at $2. It's up 18% today. And I will show you something that is rather positive, because the reason why it's only $2 is because this is a business that's losing money. It's burning cash. They have a negative net income. However, if we look at the last 3 years, we can see there's an uptrend. Like the negative net income was in 2022 was minus 366 million. But here it was only minus 160 million. So if they continue this trend, they improve their management and they become more efficient, then this business can turn around. And once this business becomes profitable, the intrinsic value of the company will be much and much higher, which is great for investors. So the net income is in a kind of trend up. It's negative, but it will be less negative, which is great for the future. But what about the debt? Well, here you can see that the debt is over $1 billion. And it isn't looking great. That's why a few weeks ago they did a debt to equity swap. So Beyond Meat stock crashes 56% as debt to equity swap triggers massive dilution. So they did this to collect cash and to make their balance sheet and financial statements look much better. And that helps the company survive for a longer time. So dilution is essentially creating shares out of nothing and then selling those shares. It's similar to like printing money. They created more shares and they sold the shares to the people they were lending from to reduce their debt at the moment, which gives them more time to turn around. So this debt to equity swap helps the company to survive longer, and it will postpone bankruptcy, which is great for investors. So in this article, we can see the short interest ratio and the short volume. And people look at this data to predict the next short squeeze. And if we're looking right now, we can see that the current short interest is 51 million shares, but there are almost 400 million shares out there. So the short percentage of float is 13%. The amount of shares that are borrowed and are basically shorted is 30% of all tradable shares at the moment. And that's not that much anymore. So I'm not expecting necessarily a short squeeze based on this. And if we look at the short interest ratio, it's 0.4. That means that if the price goes up extremely high, then the short sellers have 0.4 days to cover everything, buy everything back. So I think 0.4 is pretty low, and I don't think that will cause a short squeeze. However, I do believe that the shorters, all these hedge funds are shorting, they're scared. So they're not, because they don't want to lose big money, right? Because it's now a meme stock and it's a fundamental business with a potential upside, and the business can genuinely turn around. I think that will push the price up higher, and there will be a small form of short squeeze. I think just the massive psychology and all these people behind it and excitement behind this stock could push the price higher. So we're now looking at StockTwits, and it's trading around $2.05. And here you can see that the sentiment is extremely bullish. You can see here, which is great. And the message volume is also pretty high. And we can see that there's a lot of jokes going on, right? Like Diamond Hands. And there's so many people behind this stock, and they're holding it for long term. And I think that's great. It's fun to participate in this kind of meme stock. And I think there is actually a lot of upside in this company. I really like about this one that it has a real product similar to GameStop, which you can buy. And that's amazing. So before we get too excited to buy Beyond Meat, we have to go over these 5 mistakes we need to avoid. So the first one is don't use leverage. Don't borrow money from brokers to invest. This always leads to big losses that are really hard to recover from. So once you're borrowing money from brokers and you're paying interest on these loans, it's almost guaranteed that you will get wiped out. The market will drop and you are forced to sell and you lose everything. So don't do that. The second rule is don't break your allocation rules by wide margin. For example, you can say I allocate maximum 2% to this stock, for example, and then you are just accepting that you might, if the stock goes to 0, you lose 2% of your portfolio. Easy to recover from. If you put everything in this stock and it goes down 50%, which is very easy to go because it's super volatile, you need 100% return to go back. So now you're risking a lot to make a lot. But if you allocate a small percentage to a high speculative stock with a high upside potential like this one, then you're risking small to make a lot because you're only allocating a small, and now the statistics are in your favor, which is much better. The third rule is don't fall in love with one business or stock. This is always a bad habit. Don't think it's not your child. Don't exaggerate, don't be emotional with this. We are just here to make money, right? And it's fun to participate in this kind of meme stock. And we're just holding Diamond Hands. Once it goes super high, we need to sell in stages to lock in some profits. We need to be logical. We cannot fall in love with one stock. And that also goes back to the second rule, don't over allocate. The fourth rule, stocks will make you richer statistically, but you don't know which one is going to be the best, right? So that's also why you only should allocate a small percentage, because if you allocate your whole portfolio, if you're bad luck, it's game over. And like Warren Buffett, he said never lose money. That's his rule, right? So the reason behind it is because if you have big losses, it's hard to recover from. And that's why we only allocate a fixed percentage to one stock of our portfolio. And the last one, don't listen to the news. Once you have your certain stock allocation, let's for example 5%, and it meets your criteria and you like the stock, just don't panic sell. It doesn't matter. You can maximum lose 5% of your portfolio. You can make it back with another stock. We're now looking at the charts of Beyond Meat on TradingView, and it's trading right now at $1.92, and the market is going to close in 1 hour and 34 minutes. And it's now October 28th. And it seems that the price is less volatile now. It seems a little bit more stable. I think that's great to see. We can see that the 200 is still above the 50 EMA. So it's has always been in a very long downtrend. But now it kind of broke out and then it became under again. So if we want to buy low, we need to find whether this is a support level or not at $1.922. We're going to use the Fibonacci levels. So this is point A. This is point B here, and here is the support level. And we can see that it broke below this 0.786 level here, and then it went slightly above it, and then it went down below it. But if it can bounce off this area, then there's a high probability that we will just bounce all the way up and beyond. In short, I'm bullish on Beyond Meat. I just bought more shares. And I think This is a speculative stock. It's a meme stock. It's fun. And it's a great addition to your portfolio. Of course, don't over allocate in this company, but having a position is great. And I think the potential upside can be tremendous. Thanks a lot for watching. I really appreciate it. I hope you learned something. Always do your own due diligence. And don't forget to like and subscribe. And I'll see you in the next video.